$1.2 trillion. Let's just let that sink in for a minute. Earlier this week, President Joe Biden signed into law the massive infrastructure package. It'll deliver $550 billion of new federal investments in America's infrastructure over 5 years, touching everything from bridges and roads to the nation's broadband, water, and energy systems.
Eric, that is a lot of money.
So what can we expect? And are there any opportunities for us as a result of its passage? I'm Jonathan, and we're talking new infrastructure plan and stock markets in today's edition of Constant Cash Flow. Regardless of political affiliation, anytime money of this magnitude is spent, it has an effect on the stock market in some way, and ultimately, you and me, the investors. First, let's take a quick look at what key investments are included. The legislation calls for investing $110 billion for roads, bridges, and other major infrastructure projects. Included is $40 billion for bridge repair, replacement, and rehabilitation. There's another $16 billion dedicated for climate change mitigation and safety for all users, including cyclists and pedestrians. Also in the package is another $11 billion for transportation safety, including a program to help states and localities reduce crashes and fatalities, especially involving cyclists and pedestrians. It will direct funding for safety efforts involving highways, trucks, and pipelines, as well as hazardous materials.
Safety is first.
It provides $39 billion to modernize public transit. The funds will repair and upgrade existing infrastructure, make stations accessible to more users, bring transit service to new communities, and modernize rail and bus fleets, including replacing thousands of vehicles with zero-emission models. The deal will also invest $66 billion in passenger and freight rail. The funds would eliminate Amtrak's maintenance backlog, modernize the Northeast Corridor line, and bring rail service to areas outside the Northeast and Mid-Atlantic regions. It also provides a $65 billion investment in improving the nation's broadband infrastructure, including low-cost internet service to millions more homes. The legislation will invest $17 billion in port infrastructure and $25 billion in airports to address repair and maintenance backlogs, reduce congestion and emissions near ports and airports, and promote electrification and other low-carbon technologies. It will provide $7.5 billion for zero and low-emission buses and ferries, aiming to deliver thousands of electrical school buses to districts across the country. Another $7.5 billion will go to building a nationwide network of plug-in electric vehicle chargers, along with $65 billion to rebuild the electric grid. It calls for building thousands of miles of new power lines and expanding renewable energy. It provides $55 billion to upgrade water infrastructure, which will focus on replacing lead service lines and pipes so that communities have access to clean drinking water. This influx of capital looks promising for a few different investments that also hold long-term potential. Let's look at two that I believe are good investments right now, and then look at the industry winners and losers of the infrastructure deal.
Yeah, baby. Yeah.
First on our list of infrastructure stocks is heavy machinery giant Caterpillar. This company is one of the larger ones that stand to benefit from the infrastructure bill, producing about $50 billion in annual revenue and trading with a $113 billion market cap. Perhaps more so than most companies, Caterpillar has a very direct and deep link to the kinds of spending enumerated in the bill. It makes heavy equipment for all sorts of things that are directly called out in the bill. This includes machinery for making roads and bridges, digging equipment which is critical for water system service and replacement, as well as broadband access expansion, and the list goes on. This company is impressive in its own right, even before considering the impact of the infrastructure bill. Caterpillar has a 28-year streak of raising its dividend at a rate of about 9% per year, which is even more impressive considering the industries Caterpillar sells to are highly cyclical. I expect that to continue as we see 6% earnings per share growth annually in the coming years, with potential upside from the impact of the infrastructure bill.
That's what I'm talking about!
Now let's switch gears a little bit and look at an ETF that's particularly interesting with the passing of the infrastructure bill. The Global X Lithium and Battery Tech ETF, ticker symbol LIT, invests in the full lithium cycle, from mining and refining the metal all the way through to battery production. Lit has performed very well over the past year, up over 80%. And although we may not see an 80% return over the next year, I definitely expect to see continued promising returns. The majority of the fund's assets are allocated toward the materials sector, followed by industrials and information technology. With the heavy allocation of the bill toward investment in electric vehicles and electric vehicle infrastructure, it could be a great growth investment over the coming years. Not only does this ETF give investors exposure to lithium and battery stocks such as Albemarle Corp, LG Chem, Samsung, Tesla, BYD Company, and Panasonic, it also does so at less cost. For example, if you were to buy 10 shares of every listed stock, it would cost you thousands of dollars. But with this ETF, you can gain exposure at just $92 a share. Most analysts have a price target in 2026 of around $245 per share, giving us a target 166% profit over the next 5 years. Last, let's take a quick look at the industry winners and losers of the new law.
We've been waiting so long for this.
Overall, the big winners in this deal are big telecom, global supply chain and delivery, electric vehicles and lithium batteries, metals, and nuclear power. Investments like AT&T, Charter Communications, Amazon, FedEx, UPS, Tesla, steel industry stocks, Exelon Corp, and uranium miners will all benefit in a big way from this cash boost. Now, if we look at the big losers, we go the way of chemical corporations because of the reinstated super tax fund, which revives a previously expired tax on chemical producers that may increase costs for plant operations. Fees will be imposed on 42 chemicals, including many of the materials needed for infrastructure and climate improvement, such as plastics and other synthetics, at double the rates in place when the tax expired in 1995. Unfortunately, another industry on the losing end is cryptocurrency.
You're starting to scare me.
Although some lawmakers see cryptocurrency as a source of technological innovation, industry leaders fear the bill presents an obstacle for growth. The bill would impose stricter tax reporting requirements for crypto brokers, mandating brokers to report gains and transactions of more than $10,000 to the IRS, similar to stockbroking practices. And finally, Big Pharma takes a hit as well. By delaying a controversial Trump administration rule that would radically change how drugs are priced and paid for in Medicare and Medicaid until 2026 at the earliest, the measure will effectively ban drug makers from providing rebates to pharmacy benefit managers and insurers. Instead, drug companies will be encouraged to pass the discounts directly to patients at the pharmacy counter.
That's good for me.
It's currently expected to go into effect in 2023. This is expected to have a $50 billion hit to revenues for big pharma companies. Thanks for watching. That wraps up our discussion on the infrastructure bill and what it means for investors in today's market. As always, please do your own research before making any investments to see if it's a good fit for you, your goals, and your personal risk tolerance. Keep an eye out for my next video coming out in just a few days that talks about the best dividend stocks to buy now. Let me know in the comments what you thought about today's video and what you'd like to see discussed in future videos. I want to make sure that I'm putting out content that you want to see, and I really value your input. I'd appreciate it if you could leave a like and subscribe to the channel if this video helped you in any way. On the right, you can find more great videos to help you on your journey to constant cash flow. I hope you enjoyed today's video. See you next time.